Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Let's dive into the big market moves from yesterday. So, Wall Street took a heavy hit yesterday with a massive sell-off driven by mounting concerns about the U.S. economy. The Dow Jones Industrial Average plummeted over 1,000 points. The tech-heavy Nasdaq Composite dropped more than 3.4%, and the Standard & Poor's 500 fell nearly 3%, marking its worst day since 2022 and its roughest start to a month since 2002. The market's fear gauge, the CBOE Volatility Index, spiked to its highest level since the early days of the COVID-19 pandemic before easing off. Treasury yields also fell, with the 10-year Treasury yield dipping near 3.8%. This market turmoil followed Friday's disappointing U.S. jobs report, which added to worries about the economy and the Federal Reserve's timing on interest rate cuts. Nearly all bets are now on the Fed to cut rates by 0.5% at its September meeting, according to the CME FedWatch tool. Big names in the stock market saw significant drops. Apple fell about 5% following news that Berkshire Hathaway halved its stake in the company. Nvidia slid over 6%, and Tesla declined more than 4%. Cryptocurrencies weren't spared either, with Bitcoin dropping over 10%, nearing the $54,000 mark. The sell-off wasn't confined to the U.S. Asian markets followed suit, with Japan's Nikkei 225 plunging more than 12% in its biggest ever daily loss after the Bank of Japan's surprise interest rate hike last week. The sharp rise in the Japanese yen against the U.S. dollar prompted heavy selling as speculators liquidated their U.S. risk assets. Looking ahead, the U.S. market is entering a quieter week in terms of data and earnings. With the job market still in focus, the weekly unemployment claims due Thursday will be closely watched. That's all for today's Capital Markets Quickie. Thanks for tuning in. I'm Endrit Sella, and I'll be back tomorrow with more market updates. Have a great day.